Hello, I'm Jessica Amir for the Finance News Network. Today, I'm with Flinders Investment Partners, Richard Macdougall. Richard, welcome to the network.
Thank you.
So first up, Richard, you're the co-founder and portfolio manager of Flinders Investment Partners. Maybe you can tell us what's new and exciting at your firm in 2019.
Well, every year is exciting in small companies, but I think this year, with almost no growth out of large caps, we expect small companies to grow very strongly this year. So we think it's going to be exciting. As for Flinders, we've just clocked up over 3 years. Our performance has been strong. We have new positive ratings from investment consultants, so it's looking like a very exciting year for us.
Well, congratulations on the recommended rating by Lonsec. Now turning to the election in May, what does it mean for investors?
There's a lot to think about with a potential change of government. Obviously there's tax policies, such as capital gains tax, potential tax or some pricing on carbon. There's potential changes obviously to negative gearing. All of that can create quite some changes to the investment environment, but ultimately it'll boil down to confidence and growth. And we're just focusing on companies that can grow over the next few years and the environment that they can. And if there are tax changes that help or hinder, we'll take notice of those at the time.
And now to your offering, Richard, just walk us through your investment process.
The Flinders Emerging Companies Funds focus on growth. Companies that can grow and will grow into the future. So that's our main focus. But we also have a strong focus on management ability to execute on that growth potential. We also we model up virtually every company that we look at as a potential investment and put a valuation on the companies and use that as a benchmark against share prices. So growth, management, risk assessment, and then a strong focus on financials are all really important parts of our process.
Now can you just take us through the portfolio in more detail? We're
benchmarked against the Small Ordinaries Index, and that's stock number 101 to stock number 300. And our portfolio will always majority sit in that part of the market. We also have some smaller companies than that, but as I said before, they have to be making money. We have around 40 stocks in the portfolio and a minimum position in a stock of 1.5% of the portfolio. We don't hold much cash. Our maximum cash position is around 10% of the fund at any time. So effectively, we're fully invested. As far as the actual the shape of the portfolio, we invest in any sector. We don't disregard resources, we don't disregard healthcare, we invest in all sectors as long as there's a good investment opportunity. Our largest positions at the moment include stocks such as Service Stream, Seven Group, Gold Road Resources, Bingo Industries. So there's quite a broad range of companies. If we look at some of the sectors that we've got exposure to, we quite like the tourism sector at the moment. So we have companies like Webjet and a number of others that are exposed to that part of the market. With the tourism industry, it's obviously benefiting from the lower Australian dollar. And we think that inboard tourism is only going to increase with Chinese tourists and other Asian countries visitors coming here. So exposure to that industry and companies that can grow in that industry is quite attractive to us.
And just lastly, Richard, before we let you go, is there anything else that you wanted to tell us today?
Nothing apart from the fact that we strongly believe that, that a small cap managed portfolio is a really important part of anyone's growth portfolio or anyone's growth investment. So that's all we focus on at Flinders. That's the way we invest. We just have the one product and it's total focus on small companies. We think with the upside to our investment opportunities over the next year or two, that there is still some great returns to be had out of small caps. We've had an average 15% per annum over the last 3 years, but with that upside, we think we can continue to create really good returns for our investors.
Wonderful. Well, we're looking forward to seeing you grow. Richard Macdougall, thanks for your time at the Interprac Financial Planning PD Day.
Pleasure.